Hello and welcome back to Markets in 2 Minutes. This is Darrell from the Wealthspire Investment Team, here to provide a quick update on inflation and economic growth across the U.S. economy. So, with the midterm elections approaching this fall, one of the top issues on voters' minds remains inflation, and it's a topic that's been particularly relevant for markets as well, given that we now have a new Fed chair in Kevin Warsh, and inflation is a key component of the Fed's dual mandate. And if we go back the past couple of years, it did appear that inflation was settling in at around a consistent 3% annual clip before spiking earlier this year as energy markets were disrupted by the war in Iran and the bottleneck in the Strait of Hormuz. We are starting to see evidence of some easing of that pressure, which is a positive development, but we are still clearly above the Fed's long-term target of 2%, and there's quite a bit of work to be done to get us that final mile or so. But we have now had 2 consecutive months of improving inflation as measured by CPI, and if we strip out the notoriously volatile food and energy components and look at what economists refer to as core CPI, that figure came in at about 2.5%, which is a fairly reasonable number. Ultimately, there remains some upward pressure on inflation, and the instability in the Middle East certainly complicates matters, but we are at least seeing some signs of progress on the inflation front for the time being. Shifting over to the growth side of things, there are some important details to be aware of. First of all, the top line growth numbers remain quite healthy, with real GDP coming in at about 1.5% for Q2. That's down from the previous quarter, but well within the range of what we would expect based on recent trends. The important consideration here, though, is something we are highlighting here in the chart, which is the contribution of quote unquote fixed investment to the overall number. And that fixed investment figure is where the investments in AI infrastructure are showing up in the data. And you can see that this year it has been a meaningful contributor, adding more than 1% to GDP in both Q1 and Q2 of this year. For a long time, it was consumer spending that was sort of carrying the torch, and that piece of the equation remains very strong. In fact, it was still the largest contributor this past quarter, but we are starting to see an increasing role from AI investments, and that's something to keep an eye on going forward because any sudden slowdown there could have an impact on economic growth. We don't see any signs of that at the moment, but nevertheless, it's important to keep in mind as the cycle continues to mature and companies are continuing to sort of evolve their decision making on the AI front. So thanks again for checking in with us, and we'll see you in a few weeks for another update on data we are tracking most closely.